That program is one of my favorites, one of the easiest, because it doesn't require any income documents. You're qualified based on your credit score and based on the rent on that rental property. If the rental income that you receive is enough to cover the mortgage payment, that's all you need.
Rafa, talk to me about the pre-approval process. What are the main questions that you as a loan officer get on a daily basis from clients?
So the pre-approval process, the main questions I usually get: what does my credit score need to be? How much money do I need to make to buy a house? How much money do I need to have saved? A lot of people have this idea in their head that they have to have excellent credit in the 800s. They need to make 100,000 a year and have 100,000 in savings. That's not the case. So it truly comes down to, it does come down to the income, the credit, and your assets, right? So we have different programs that have different credit score requirements. We can go as low as 580. So the way the pre-approval process works, I usually have the conversation with the client. Tell me what you do for a living. What is your credit score? Because it does matter. It doesn't need to be an 800.
You like to know their story.
Right. I like to know. That way I kind of get an idea before we actually get further into the process. There's times where I can tell, based on our conversation, we need to get you into credit repair. Based on our conversation, we may need to add a co-applicant. If I have the person that does make decent income, have the decent credit, I go ahead and gather their documents, their pay stubs, W-2s, tax returns, bank statements. Mm-hmm. Once I have that documentation, I can analyze their income and pre-approve them. Pre-approvals can be done in as little as a day, in the same day, if the client can get us the documents that quickly, depending on their income. Mm-hmm. There's times where it might take us a little bit longer. So each applicant is different, but it can be done in as little as a day.
Right. Okay. I noticed you have 2 closings coming up next week. Tell me, what closings do you have? What product, what loan program are your clients using, and how fast was the financing?
So the 2 closings I have next week is for a DSCR product. DSCR is debt service coverage ratio. It's designed for investors on investment properties. Mm-hmm. That program is one of my favorites, one of the easiest, because it doesn't require any income documents. You're qualified based on your credit score and based on the rent on that rental property. If the rental income that you receive is enough to cover the mortgage payment, that's all you need. You don't need any additional documents, any additional tax returns, W-2s, pay stubs. And we were able to do that one in about 3 weeks.
So you didn't have to ask your client for pay stubs, for tax returns, for what else?
I didn't have to get their W-2s, tax returns, pay stubs, nothing. The only thing we need is their credit report and their bank statements. With that, we submit that over to the underwriting team, and then we order the appraisal. Once the appraisal comes back, that's basically all we need.
So it's basically a non-traditional loan with the traditional system,
right,
for closing.
Right.
They're still going to close out a title company. They do, if they close this month, they skip next month's payment, and the first payment is going to be the 3rd month.
Right.
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 So it's a normal product, just non-traditional. And
right.
That's called the DSCR loan?
DSCR loan.
Okay.
Right.
What other non-traditional loans have you been successful with?
So the other one I can think of is the bank statement loan. That's designed for self-employed clients who don't report enough income on their tax returns. So what we do, instead of qualifying them off their tax returns, we get their bank statements for the past either 24 months or 12 months. We analyze their income, analyze the deposits, and that's how we determine what income can be used.
Okay. What advice would you give right now to the younger generation? I was talking to you this morning when you got here to the studio, and my son, my 9-year-old son, came into my room this morning, and he asked me for a loan. He's like, "Mom, I want a loan for a home," and I am prepared to get to know my clients' stories and guide them and help them build generational wealth. I wasn't prepared to answer a question like that to my 9-year-old. And I was like, how do I explain income credit and assets to my 9-year-old Liam? And the only thing I could think of in the moment was, well, what is your income? He stood there. He didn't answer anything because he's probably like, what is income, right? And I said, okay, let me give you an example. If you make $10,000 a month, I can only pre-approve you for up to 50% of your income, meaning I can give you a mortgage payment of $5,000 to get you pre-approved for. He stood there and I could see a mix of emotions in his face and his response. And so I'm in like, I'm, and what is he going to do? What is the next question? I don't know what to think. So he stood there and I could tell he wanted to cry. And I'm like, was my answer wrong? Doubting myself. Well, and I never thought of it this way. He told me, whoa, Mom, I am homeless. He's like, I can't even afford a home right now. I don't have a job. I'm homeless. What am I going to do? He left the room and I'm like, okay, like that was a good start of my day. He came back crying. He's like, I'm homeless. I don't know what I want to do. I don't know what I'm going to do. I'm never going to be able to buy. And that's not the first time I've heard that same scenario, or where the younger generation is scared of the future when it comes to houses.
Right.
So what advice would you give to the younger generation now?
My advice would be definitely talk to a lender first. We're the ones who can guide you. We have basically your entire life pulled up in front of us as soon as we pull your credit. So definitely talk to a lender. We can prepare you. You want to save your money. A lot of the clients that I have talked to or that we talk to, they like to keep cash. And that's not always ideal. So I would suggest saving as much as you can as well.
Establish credit, maybe.
Establish
and
your
how
credit.
soon can they establish credit?
You can be an authorized user on your parents, siblings, on whoever at any age.
Yes.
You can establish your own credit card, your own credit at 18. So I would suggest as well establishing credit by being an authorized user on someone's account. That way you have the credit score when you open your first credit trade line. This
is a personal story of mine. I actually have a very good friend of mine that is has always been, in my career. And one of the kids called me 2 days ago and he was like, I want to open my own business. Somehow, some way, I asked about his credit and he's like, yeah, my credit is over 700 and he's only 18 years old. How he was able to get a credit score over 700 at 18, he was added as an authorized signer for the parent account when he was 16. So he's 18 now. He's thinking about opening his own business. He already has credit. He's registering a company with the state of Texas. So I think credit at young age is super important. Right. And it starts at home. But if you don't have the support at home, reach out to one of us. We have the knowledge. I've been in the industry almost 20 years now. How long have you been in the industry?
I've been in the industry for about 12 years.
Yeah. We both came from the banking industry. I worked at a bank for 9 years and then I moved over to the mortgage side of things. And you were with the bank for?
I was with the bank for about 8 years. And I did mortgages for that bank. And then I jumped over to the broker side with you about 6 or 7 months ago. Mm-hmm.
So definitely reach out to us. I always say that we don't sell mortgages. We help people build generational wealth. Right. And we really mean it. When the clients come to us, you hear me. I'm always like, tell me your story. I want to know, what is happening in your life? What is your situation at home? Are you renting? How soon do you want to buy? Because then that lets me know, okay, well, I need to talk to this client about this and this and this and that. And we need to go over this information because it is a lot, right? And we expect you to ask questions because you're not doing this every day.
Right.
So we want our clients to ask the same questions and 5, 7, 10 different times. We don't mind. We're here to guide you and to help you build generational wealth.
Right. Exactly. And it is important to ask the questions. Just like you said, we do this every day. We see credit reports every day. We are in mortgages every single day.
Yeah.
There's some people who have no idea what a mortgage even is, and that's why we're here to help. Ask any question, even if you think it's a dumb question. There's no such thing as a dumb question.
Yeah.
It's important to ask as many questions as possible, and we're here to guide you.
Yeah. Rafa, can you meet with clients in person?
Oh, definitely.
Yes.
Yes, of course.
I've heard you taking applications over the phone. You can always send your link so that they can apply. Phone conversations, Zoom. So you're pretty available to your clients, even if it's on a Saturday by appointment, correct?
Right.
Yeah.
I'm pretty flexible with my time. Just as you said, we can either do Zoom calls, FaceTime calls, phone calls. I mean, if you're not comfortable with that, we can text. I can take your application through text. So I'm flexible with my time and my the way I'm efficient.
What's your phone number? So if a client or a realtor wants to work with you, how can they get a hold of you?
214-797-6780.
Alrighty. Well, thank you so much for joining us. I appreciate your time, and hopefully we'll be recording more videos soon.
Oh yeah, of course.
Bye.
Thank you.